Happy Friday. Brian Manning here with the weekly update. Let's get right to it. So much to talk about this week. Let's see. So Monday this week we had, it really started on Monday and has actually continued through today. Atlanta Fed president giving their feedback on what they expect for Q3 GDP. So right around August 30 or the 31st, I don't remember which day it was, one of those 2 days, Fed president came out and said, oh, we expect that we're going to see 2.6% growth in Q3 GDP. Not bad. 10 days later, they came out, they cut that in half, and they said, okay, in Q3, I'm sorry, we're wrong. We think we're going to see 1.3% growth for Q3 GDP. Okay. A week later, they came back and they said, okay, maybe we're wrong again. We think we're going to see 0.5% growth in GDP for Q3. Okay. Today, they come out and they say, we're going to revise this once again, and now we think we're going to see 0.3% growth of GDP. This is the Fed voting president. This is who controls part of the Fed funds rate. This person votes whether it's a hike or reduce interest rates. And in a matter of 3 weeks, they went from thinking our economy is going to grow at 2.6% down to 0.3%. Clearly, these people just have no idea what they're doing. We've been talking about a recession for almost a year now. And now you have a Fed president that makes these revisions of almost 2.3% in 3-week period of time. It just blows me away. Unbelievable. So now here we are. Anticipation, Fed president, Atlanta voting member, 0.3% growth in Q3 of this year. Not surprised. Tuesday this week, we had a Redfin report. Redfin came out and said, of all listings in the market right now, that 22% of them are experiencing price cuts. I wasn't really too worried about. The reason why is because I really think that 2019 was the last true purchase market that we had. So I went back, I looked at 2019, and did you know in 2019, September, 20% of all listings experienced a price reduction. So 22% right now, 20% 2019. I'm not really too worried about that. Also, Wednesday this week, we got existing home sales. This is actually a really good report. We're going to go through a lot more details of this in a minute. The bottom line is that on a month-over-month basis, existing home sales were only down 0.4%. It was expected that existing home sales to be down 2.5%. That was a pretty flat number. I'll go through some charts there in a second. And then also Wednesday this week was Fed Day. You had the Federal Reserve wrapping up a 2-day meeting, started on Tuesday, ended on Wednesday. At the end of their meeting on Wednesday, at Jerome Powell, he hiked interest rates 0.75%. Everyone expected that. Right now, in today's market, as of today, we're just experiencing turmoil because a lot of investors do not think that the Federal Reserve is confident or knows what they're doing right now. And when you have a Federal Reserve that doesn't appear to be confident and they're not sure what they're doing, markets are reacting the way they are today. And it's really too bad to see that. So they also really came out and said they anticipate hiking rates 125 basis points or 1.25% between now and the end of the year. So there's 2 more meetings. That means that you're going to see like a 0.75% rate hike again, another 0.5% rate hike, and then moving into next year, we'll have to wait and see what happens. We also got the CoreLogic rental index. This showed that rents were increasing still on a year-over-year basis at 12.2%. Still compelling for a first-time home buyer to be looking at the marketplace because rents are definitely still going up. And today we're definitely seeing mortgage rates higher. I know there's a lot of pain out there as far as mortgage rates are concerned. We looked at this last week. Unfortunately, I don't think the turbulent times are over. I don't think we're done seeing pain in mortgage rates. If you just look at inflation, and inflation is the arch enemy of mortgage rates. For the month of September, we're still going to see high inflationary numbers. So we get the September reading in the month of October. I don't think we're going to see a calming of inflation until the month of October goes by. And that means that that's a report that's going to come out in the beginning of November. The reason why I say that is because when you look at inflation, October, November, December of 2021, and then January, February, March 2022, those are all strong readings for us to replace. So I think we're going to see a calming in inflation. October readings starting in November, but definitely we're going to have some turbulent times between now and then, and we're going to feel some pain as far as interest rates are concerned. I wanted to look at something here just for the existing home sales report, just to give you some more feedback here, because it really was a strong report. So this is existing home sales. This is for August 2022, and we were down on a month-over-month basis by 0.4% to 4.8 million on an annualized pace. It was better than expectations. Expectations was that August would be down 2.5%. Yes, we're down 20% year over year, but it's still good to see us holding here in August. First-time home buyers made up 29% of all purchase transactions, so the same as last month. First-time home buyers usually vacillate between like 29 and 32, 33%. So it's a little bit at the lower end of the spectrum right now, but still a pretty solid number. Cash buyers were 24% of all transactions, so almost 1 in 4 purchase transactions were cash buyers, and investors still holding strong at 16% of all transactions. So that's 1 out of 6 are investors purchasing real estate right now. Also, if we look at inventory, there's been so much talk this year about inventory. Inventory is going to skyrocket. The housing market's going to crash. And let's look at inventory. So for the month of August, inventory was at 1.28 million units. That's down from the prior month at 1.31. We've talked about this before. We'll look at it in a second. Inventory always crests in the summer, just like it does every single year. And then August, it starts to come down because we're moving into the fall. So we'll look closer at that in just a second. We also have, based on 1.28 million homes of inventory, 3.2 months of supply. Well, a normal market is considered 6 months. So that's considered a balanced market as we have 6 months supply. What's a little misleading about the report, though, here that they never dissect, is that of the 1.28 million homes that are for sale right now in the marketplace, only 779,000 are considered active listings. That's 39% of all homes are under contract right now. A normal market is when 25% of homes are under contract. So we're still looking really good there. So if you take out the pending home sales and you just look at active available inventory, if you want to go buy a house today, we only have a 1.9 month supply of active available inventory, which is still considered a strong market. And our days on market right now across the country is still 16. So housing market holding strong. And then I just want to look at inventory. So here we are. This goes back and looks at inventory from like 2012. This is a 10-year chart. And we've looked at this before because the media is so negative about inventory. You know, every year you see inventory go up. It crests in summer, comes back down, crests in the summer, come back down. It's never different any year. It's been the same for the last 10 years. It's always the same. And now you look at inventory right now, right? So you had inventory go up throughout the year. You saw our crest in July, and now you start to see your numbers come back down to August. What's crazy is last year was considered record low inventory, and you look at where we are on available homes for sale this year compared to last year. We really didn't see much of a difference. We did not see a spike in inventory, and now we're seeing inventory come down now. I'm not saying that you're not going to see prices soften a little bit. I'm not saying you might see some decline, from the record highs, but this is not a housing crash. This is very different than what we went through in 2008. This is normal what we're seeing right now. Anytime you have such a run up in appreciation like we did, it has to calm down a little bit. But inventory is performing exactly as we would expect every single year, going into spring, into summer, peak inventory and coming back down. Again, you got to watch the media. It's so negative about everything. If you just look at the data, it usually proves to be pretty consistent right now. I'm around all weekend. If you have any questions, let me know. If you want to get pre-approved, reach out to me. If you want to go through our strategic buyer consultation, give me a call. Happy Friday. Hope you have a great day.